All right, we're back and let's get into talking about some of your most frequently asked questions. Now, over the course of my client conversations the last month, there was again a persistent theme in our conversations around Trump, tariffs, and all of the potential impacts. So I wanted to make sure that we were spending a little bit more time talking about that here today. And anytime we bring Donald Trump to the conversation, I always want to leave with the warning. Maybe warning's the wrong word, but I think the right word just could be the note that I'm discussing things from the perspective of the portfolio and from the perspective of markets, and definitely want to keep personal feelings as far away from this as possible. So again, my only goal here is to provide analysis and observation. I am not here to provide any punditry for or against any one particular point of view. So the most common question, or I would say observation, or I would almost feeling that was shared with me with clients over the course of the last month is that they really come down to clients noting that everything just feels very, very disjointed. And I definitely agree with that. Everything does feel a little bit disjointed right now. And it's like the box is being shaken, like someone's trying to find the prize in the bottom of the box of cereal. Now, we also want to put this in historical context. I did reference earlier in the video the data provided by the Stock Traders Almanac, which clearly indicates that the February of a president's new term is usually a very, very volatile month, and for some indices, the worst month of the year. Now, I think so we don't want to assign any magical powers to Donald Trump here. We have to remember that it doesn't matter who won. If Kamala Harris was president today, it would be very likely that there would be some volatility here as she started her new term. And so I think that that's a major driver, is a lot of this is just plain normal. Now, some of this is also, I believe, enhanced because of the speed at which the Trump administration is moving. They seem to be moving at the pace of Silicon Valley, which is fast by the standards of business, and business is fast by the standards of government. So if it seems like a lot is happening, I'm going to say, yeah, it is. You have fast-moving Silicon Valley entrepreneurs helping to drive the agenda. And because of this, it really it appears to me that the Trump administration is operating on the theory of what's called the 100-day presidency, which basically says that from inauguration until the summer recess, whatever it is you want to get done, you'd better get that done in that first initial period, that 100 to 120 days of your presidency. And after that, who knows what can get done. So I think that as we go forward, things will calm down and the pace of change will abate. However, we also want to remember that this is completely normal in a historical sense, that there is some churning in markets. And the fact is that we are churning near highs. And so I think that's very important. So when you really think about it, the disjointed feeling we're getting is just more of a manifestation of adjusting to new change. And I think I'm going to credit Dave and Jackie here for giving me the line that says basically it feels worse than it is. So thank you, Dave and Jackie, and we'll move on to the next question now.